having a technical map as to what the market may well do means that when you get a fundamental driver, you've already got an idea in your head about where the market can go, how it can do it, and what you're looking for to enter a trade. So, from your hourly point of view, this is what we've had. We've had this big drop down in oil over the recent days. Inside day yesterday, or sorry, Friday. So there's the high of the day, sorry, high and low of the day, the two red dashes. First thing this morning, i.e. 11 p.m. UK time, so as soon as oil opened on Sunday night, we got one spike up above previous highs, giving you a new high up at 60. So this is the first attempt higher that then gets rejected. What you can view that as is an accelerator point. Once you get through there, the market should open up to the upside, because anyone who's short in this zone is then going to go, right, I know where I can put my stop. I can put my stop above the point where we ran out of buyers. So those 60s are then going to be key. What you can then do is further map this out as well. You've got a low here at 36s, which also holds the majority of Friday's trade below it. You look on a shorter term chart, you can see these 36s just on this line here. Trade, trade, tick through, trade. And then this morning, we get a push up towards 48. What this now gives you is a trigger point, a point where if 48 breaks, because the fact this is already traded through 36s, we've traded back, if you get through 48, your aim here would be that we break 60s. And if you get to 60, chances are you're going to get people rushing for the exits. Now, having this mapped out in your head would mean that you're looking for this trade anyway. The fact you get a bit of fundamental news, i.e. potential escalation in Iran, is your cue to then start thinking, right, this could really go. This is now the move that I was looking for. And effectively, the fundamental news has been enough to tilt this market to the upside. So what we've got here, we're up at 48. So the news is not yet hit, and you'll see this in the ladder when the news does start to get hit. But you could be planning this trade already. At these 50s, you've got 100 lots sitting there. The market can trade comfortably through that, so trade through that easily. That then sets up the move. You're going to expect that 60s should trade, and as soon as it trades, you'd expect to see a jump to the upside. So even without this news, you'd be looking for clues to start buying it through the 48s, and this is where we're up to just here. As you get up to 48 again, what you're looking for is markets start trading into the offers, At the moment, not a great deal going on. So this wouldn't necessarily entice you in. And what you're just waiting for is when we get up there, you want to see more pace, you want to see more hitting into the offers, Once you get that, that's where you say to yourself, right, through 48, here we go, a little bit more pace there, just quick tick up, not too much, but you get a little clue, little sense that people are a bit more willing to go a bit aggressive on the buy here. And there we go, straight through that 50. So even without knowing the news, you can see the aggression. 100 then starts chasing up as well. This is your momentum type move. This is exactly what you want to see. You're expecting 60s to break and it to jump above 60. And there we go, straight through 60. 66s, 7s, 8s, mid 70s starts trading, and then we start slowing down just up the top, traded 78s, 79s. Now you're getting a pullback. This is where you're now looking to see if we can absorb here, 72s, we get the next leg of the move. But this is all about having the trade mapped out, not necessarily in your head, but having the trade idea mapped out beforehand so that you're ready for this. And whether this comes on news or whether this comes as just a technical break, you're ready, waiting for this to play out. Bigger target, which we do then eventually reach, is up here at the 04s, and this is those 57.04s that I mentioned. That called the high of the day. That was these highs and the top of this liquidation candle. That called the high of the day, or at least did for the early part of the trade, and still has in fact, before we then got the market backing off again. But once you got up, you then get a slowing down of trade up in the high 70s. We reversed back. From this point of view, as long as you're staying above 60, and really as long as you're staying above this little low volume zone just here, this market's good to go higher. We trade back to 66 as the lowest we get back to, before then progressing all the way up towards 57.04. So this is a case of, if you map the trade out, it made that fundamental trade a lot easier to take. Rather than you sort of just having to weigh up how big a deal is this fundamental news, it was more a case of, this fundamental news is what's going to tip us towards breaking to the upside. And once you've got that in play, that's where you can comfortably go for the trade. You have more conviction. The pace as it went up to 48s, 50s was there. This then meant that you had scope to get in for the break of 60. Right, one final thing to have a quick look at. Once again, back on oil, but I talked about this on, well, throughout last week, and I decided, well, after seeing the move progress down,